Hey everyone, hope you're having a fantastic day. Today we are facing a challenge that every accountant encounters at some point, dealing with errors. We have got a detailed scenario from Genuine Traders and Suppliers Limited, where we need to identify and fix a range of mistakes that initially threw off their trial balance. Don't worry, if the correction feels a bit tricky, we will go through each one methodically, explaining the why behind every adjustment. At the end of this video, you will have a solid understanding of how to approach these types of problems and confidently arrive at the correct financial figures. So let's learn together and conquer these accounting errors. This is your tutor, Senior Huntington. Don't forget to subscribe to my YouTube channel. Don't forget to share with friends as long as you believe that the content on this channel will benefit them. Explain any four errors that cannot be detected by a trial balance. Remember, a trial balance is a list of all the debit and the credit balances in a ledger at a specific date. After doing the balancing of the different accounts, then we carry all those credit and debit balances, we list them in the trial balance. Now, the primary purpose of the trial balance is always to check the arithmetical accuracy of the ledger accounts by ensuring that the total debits equal the total credits. However, certain types of errors do not affect this equality and therefore cannot be detected by a trial balance. So here they are asking for those four errors that cannot be detected by a trial balance. Now, one of the errors is error of omission. So number one, we have error of omission. Now, an error of omission, this occurs when a transaction has been completely omitted from the accounting records. So since neither the debit nor the credit aspect of the transaction has been recorded, the trial balance will still balance. The trial balance will still balance. So that is error of omission. For example, if you purchase goods on credit from a supplier and you completely omit this transaction, your trial balance will still balance. Okay. The other error is error of commission. That is number two. Error of commission. Error of commission. What is an error of commission? An error of commission, this happens when a transaction is recorded in the correct class of account, but in a wrong specific account. So you're entering the transaction in the correct class of account, but in the wrong specific account. You'll find that the amounts debited and the amounts credited will be the correct amounts, though you're entering in the wrong specific account. For example, normally this error happens when it comes to personal accounts of customers or personal accounts of suppliers. So instead of debiting a supplier's account, John, you debit a supplier's account, James. So they are all trade payables, but you're entering the transaction in a different personal account. That is error of commission. So the transaction happens, the error happens when the transaction is recorded in the correct class of account, but in a wrong specific account. Then we have error of principal. Error of principal. Error of principal, this occurs when a transaction is recorded in violation of fundamental accounting principles. You will find that the debits and credits might still agree or might still balance, but the financial statements will be incorrect. So you're recording or you're entering the transaction in a wrong class of account. For example, instead of recording in a fixed asset account, you record in an expense account. Such error, that is an error of principle. For example, when you purchase a computer, that is a fixed asset, and you wrongly debit this computer to the purchases account, which is an expense account, and then you credit your cash, you'll find that the debits and the credits still balance, but your financial statements will be incorrect because of this error. So such an error, we refer to it as an error of principle. You're recording the transaction, but in a wrong class of account. Instead of debiting the asset account, you debit the expense account. So your debit and credit balances will still be the same, but your financial statements will be incorrect because of that error. Then we have what we call the compensating errors. Compensating errors. When it comes to compensating errors, these are two or more errors, where the total debit error is exactly offset by the total credit error. So you'll find that the individual accounts are incorrect, but the overall trial balance will still do what? The overall trial balance will still balance. If I make an overstatement of the purchases by, say, 1 million, that can be compensated by an understatement of the sales by the same what? By the same amount. So these errors will cancel out each other, and then your trial balance will still do what? Will still balance. So those are some of the errors which you can talk about here, though there are some other errors like complete reverse of entries, errors of original entry, transposition errors. All those errors cannot be detected by trial balance. Then from there we have Genuine Traders Suppliers Limited has prepared its financial statements for the period ending 30th June 2024, reporting a net profit of 5,540,200. However, the credit side of the trial balance exceeded the debit side by 18,750,000. Upon further investigation of the information, the following discrepancies were identified. What are the requirements here? Let's look at the requirements of the question. Prepare for GTSL for the period ended 30th June 2024. Journal entries to correct the errors 1 to 9. So I'm going to be correcting error by error. So closing inventory on 30th June 2024 was valued at shillings 14,250,000, and it was not accounted for in the books. It was not accounted for in the books of accounts. So in this case, the closing inventory was omitted. The closing inventory was omitted from the books of accounts. So this is an error of omission, and you find that this is one of the errors that do not affect the balancing of the trial balance. So what we do with this error, on correction, we have to record our closing inventory. We have to record our closing inventory. The omission of this closing inventory understates our assets figures, and it overstates the cost of goods sold, thus understating the profit figure. So how do we record the closing inventory that has been omitted? What we do in this case, we debit the closing inventory. We debit closing inventory. So debit closing inventory, because this is an asset, so there has to be a debit in the closing inventory account. So that is 14,250. Then what do we credit? What do we credit? we credit the cost of goods sold. We credit the cost of goods sold. Credit cost of goods. Credit the cost of goods sold, and that will be 14 to 50,000. Remember, cost of goods sold, that is an expense which is part of the trading account, and closing inventory is always a deduction in the cost of goods sold computation. So to correct this error, we have to debit the closing inventory and then we credit. We have to debit the closing inventory and then we credit the cost of goods sold. That is in the trading account of the statement of profit or loss. The interest on the loan of shillings 5,270,000 remained outstanding. The interest remained outstanding. So this is an accrued expense. Cost needs to be recognized to correctly reflect the expense for the period. So how do we credit? How do we record this interest on loan that remained outstanding? We have to increase our interest expense. So we have to debit the interest expense by the amount, that is 5,270,000. Then we have to credit the interest payable with the same amount. Interest payable, that's a liability account, and we know according to the rules of double entry, the credit entry will increase the liability account. So that is the entry to record the outstanding interest on loan. Then number 3, the utility bill expenditure was understated by shillings 1.2 million. The utility bill expenditure was understated by shillings 1.2 million. This is an undercast of an expense, utility bill expense. Now the utility expense here is too low in this case. We just need to increase it by the amount of the understatement, which is 1.2. However, to record this 1.2 as an increase in the utility expense, we use what we call a suspense. We use what we call a suspense account on correction of this error. We use a suspense account on correction of this error. So what is a suspense account? A suspense account, of course, it's that account where we insert the balancing figure in our trial balance as we are trying to identify the errors that were made. So it's just a temporary account that you use to make your trial balance total. To make your trial balance totals be the same, but it's a temporary balance which you will have to write off after you discovering and locating the errors and then correcting them. In this case, we use the suspense account to record this undercast error. This error affects the balancing of the trial balance. So for those errors that affect the balancing of the trial balance, you'll see that I'll be using a suspense. I'll be using a suspense account. So what we do here, we debit the utility expense, that is by 1.2, and then we credit the suspense account. Credit suspense account, credit suspense account by the same amount, so 1.2. That is error number 3. Then we move to error number 4. The payment of the telephone costs of shillings 700 was only recorded in the cash book. So the payment of telephone costs of shillings 700,000 was only recorded in the cash book, meaning that there was only the credit entry without a corresponding debit entry. So the payment was correctly made, that is the credit to the cash book, but the expense account was not debited. general ledger. What you do, still this error will affect the balancing of the trial balance. So you have to debit the telephone. You have to debit the telephone expense account because it was not recorded in the telephone expense account, but it was recorded in the cash book. So you debit the telephone expense account by 700,000 and then credit the suspense. Credit the suspense. I've told you use a suspense account here as the corresponding credit might as the corresponding debit entry might not be clearly identified from I'm using the suspense account simply because we know that in the cash book everything was fine, but the error was made in the telephone expense whereby the 700 was not recorded. So to record the 700 in the telephone expense account, I will use a suspense. I'll use a suspense account to record this. So credit suspense account. Credit the suspense account. That's 700,000. Correct that error. Then the purchases figure was undercast by shillings 11.6. This is also an error which will affect the balancing of the trial balance. Undercasting means that the total was calculated to be lower than it actually is. To correct this error, what we have to do, we need to just increase our purchases account, but still I'll use the suspense account because this undercast error affects the balance of your trial balance. So we increase the purchases account by making a debit entry. This is an item of expense, 160. Then we credit suspense. Credit suspense account. The same amount, 11,160. 11,160. Then the discount received of shillings 1,380,000 was credited to the discount allowed account. The discount received, which is an income, was credited to the discount allowed account. Now, discount received, that's an income, credit balance, or the discount allowed is an expense, which is a debit balance. Now, this is an error of principle, and of course, it will affect your profit because instead of recording in the income account, they are recording in the discount allowed account. So, what you have to do, you have to cancel out the entry in the discount allowed account, and then you make the correct entry in the discount received account. So, since the discount allowed account was credited in error, come and debit discount allowed by 1,380 and then credit discount received by 1,380 by 1,380 discount received by 1,380. So that's an error of principle. You're recording in a wrong class of account. You're supposed to record in the income account, but you record in the expenses account. Then the advertising cost of shillings 6.4 were recorded as shillings 4.6, but we are correctly recorded in the cash. The advertising cost of shillings 6.4 were recorded as shillings 4.6, but we are correctly recorded in the cash book. Now, here the advertising were recorded as shillings 4.6. The advertising expense is recorded at 4.6 instead of a 6.4. So there is an undercast in the advertising expense account. There is an undercast. So what you have to do, you just need to increase the advertising expense because the corresponding entry in the cash book, that is the credit entry, was correctly recorded. So we just need to get the difference That is 6.4 minus 4.6. That's around 1.8. So we have to just debit the advertising expenses by 1.8 to increase the account because there was an understatement. The accounts advertising expense. Increase that account by 1.8. But because this is the one-sided error, I'll use the suspense account on correction of this error. Then a payment to suppliers of shilling 3,890,000 cash was only recorded in the cash book. Still, this error will affect the balancing of your trial balance. The cash payment of your trial balance, the cash payment, which is the credit, the cash book was recorded, but the reduction in the accounts payable was not. When we are reducing the accounts payable account, we have to make a debit entry. So meaning that in this case, to correct the error, just debit the accounts payable, debit the accounts payable account by 3,890,000 and then credit suspense account because it's a one-sided error. So you have to use the suspense account to correct this. The corresponding credit entry was made. It's only the debit that was not made. The depreciation charge on new furniture and fittings acquired during the year of shillings 2,625,000 was omitted in the books of accounts. How would you record depreciation? This depreciation was omitted, so we just need to record the depreciation in our books of accounts. This is an error of omission. So being that depreciation is an expense, it reduces the value of assets, so its omission will understate the expenses and overstate our profits as well as the asset values. So what we have to do to record this depreciation, you debit the depreciation expense. Debit depreciation expense. Debit the depreciation expense. That is depreciation expense of how much? Of 2,625,000. And then you credit the accumulated depreciation. So credit accumulated depreciation. That is furniture and fittings by the same amount, which is 2,625,000. So those are the entries, the journal entries to correct the errors 1 to 9 above, as you can see. These are our journal entries to correct the above errors. Then suspense account, you're required to come up with the suspense account. You have some 3 marks there, and I've told that the suspense account is used to temporarily hold the difference in the trial balance and also to park the unknown offsetting entries for some of the errors which we have seen. So I'm going to come up with a suspense account. But when we look at the information given, we see that the credit side of the trial balance exceeded the debit side by shillings 18,750,000, meaning that the suspense account has a balance. The balance brought down, that balance on the debit because the debit side was smaller, and that is 18,750,000. 18,750,000. So after entering the balance, now you'll have to look at these different entries that we have made. You have to get those entries where we have used the suspense account on correction of the error. We have this. Then we also have this. We have this as well. Then where do we have the suspense account? We also have it here. Suspense. Also have it there. And then you also have it on the advertising expenses, is it? Yes, on the advertising expense undercast. So this is where we have the suspense account. Then you also have it on the payables. So these are the errors where we have used the suspense account on correction. So you have to enter these amounts in the suspense account. For example, when you look at this, the suspense account has been credited because of the correction of the error in the utility expense account. So we come, we write utility, we write utility expense because the suspense account has been credited to correct the error in the utility expense account, and that amount is how much suspense account has been credited with a 1.2. Suspense account has still been credited on the correction of the error in the telephone expense account. So we still credit our suspense account, telephone expense, telephone expense, telephone expense. The suspense account has been credited with 700. Still, the suspense account has been credited because of the correction of the error in the purchases account. You still come and show that credit purchases. The error is how much? The amount is 11,160,000. Then we see where else do we have the suspense account on correction of the errors. Advertising, still the suspense account has been credited. Advertising, the suspense account was credited with how much? With the 1.8. Okay. Then you also have the trade payables. The suspense account has been credited. Trade payables. Suspense account has been credited with how much? It has been credited with 3,890. So that's what we have. So now what you have to do, you have to balance off your suspense account. And on balancing this suspense account, you find that your debits should always equal to the credits on correction. On allocation and correction of these errors, the debits of the suspense account should be equal to the credit because the errors have been identified and we have corrected them. So the suspense account balance has to disappear on correction of the errors. So you see the suspense account balance is now 0 because we have identified and we have corrected the errors. So that balance has to appear on the file balance. As you can see now, there is no any balance after the correction of these errors. Then from there, of course, we are required to come up with a statement of corrected net profit. Statement of corrected net profit. Some of these errors will affect your net profit figure. So you have to recalculate the net profit figure. For example, this error where we have to make the credit entry in the cost of goods sold, this error affects the balancing of the trial. It affects your trial balance. It affects your net profit figure. The interest expense, there is an error whereby the outstanding interest expense was not recorded. This also affects your net profit. Utility expenses were understated, I think. This will also affect your net profit figure. The telephone expenses, this will also affect your net profit figure. You have to look for those errors that affect your net profit, then you recalculate the net profit again. The purchases also affects your net profit. The discount allowed and discount received, these errors will also affect your net profit as well. They will affect your net profit. So you have to identify those errors that are going to affect your net profit. Advertising expense, this will also affect your net profit. Then even the depreciation expense down here, it was omitted. This will also affect your net profit. So these are the errors that will affect your net profit. So you're required to come up with a statement of corrected net profit, with a statement of corrected net profit. As you're correcting the profit that was reported, it's what you have to start with. So you come here and say reported net profit. Reported net profit. The reported net profit is reported as how much? This is 5,540,200. 5,540,200. That's the reported net profit figure. So it's what you start with. Then after, we are going to look at these errors one by. We are going to look at the errors one by one. Cost of goods sold. The cost of goods sold, closing inventory was not accounted for. That is the first error. Closing inventory was not accounted for. So what is the impact of this on the profits? Now, when you omit the closing inventory, the cost of goods sold figure is going to be understated. So your profits were reduced. So on correction of this error, of course, now our net profit is going to increase. Our net profit is going to increase. So meaning that we have to add the closing inventory when correcting the profits. So this is going to be an addition. So we add the closing inventory. At the closing inventory. I've told you that by omitting the closing inventory, the cost of goods sold figure is overstated. And when you overstate the cost of goods sold figure, the profit reduces. So on correction, we have to increase our profits by adding the closing inventory. That closing inventory was how much? The closing inventory is 14,250,000. So that's going to be an addition. Then which other errors do we have? I think I should first list those that are going to increase our profit. Seeing a discount received. The discount received will also increase our net profit. So the discount received. We'll look at the discount received. We have made a credit to the discount received account. So this discount received increases our profit because initially a debit entry, initially the credit entry was made in the discount. Is it? Let's see. Discount received of shilling. This was credited to the discount allowed account. Yeah. An entry was made in the discount received account of shillings 1,380,000. Yes. The profit was increased. The profit was increased. So what we have to do, we have to just reduce our net profit because we see that we can increase the net profit. At the same time, we can also reduce the profit by the same amount. So I just need to add back the discount received to remove the incorrect debit, the discount allowed, and then of course at the same time I can add the discount received and then I also deduct the discount allowed of the same amount. Alternatively, I can just increase my net profit by a double figure. By a double figure. So what I'm going to do, let me just increase the net profit by adding the discount allowed. So by adding the discount received, because discount received is an income, so I can say uh, discount received, because our journal entries are here. We credit the discount received and then we debit discount allowed. One is an income, then one is an expense. But you'll find that the impact on this on profits is zero, because initially the profits were overstated, yes, because it was a discount received, which is okay. We're supposed to credit our discount allowed. So there was a reduction, the discount allowed account, which indirectly will increase your profit because now the expense is understated. So I can come and increase the profits by that same amount of 1 million, 1,380,000. Any other error which will increase our profits? You can just look at those errors that are in red, then you see where you have a credit. Any error which affects your profits and on correction it's on the credit side of the journal, then that one will be an addition to the profits. These are the only two errors which will increase our profits. What you do, you can add them. I have this giving us 15,630. Then I have to less. Now I will list those errors which are on the debit of my journal. For example, I have the interest expense. So I can bring the interest expense. That interest expense is how much? It's 5,270,000. Why am I deducting the interest expense? The reason is because when you look at that interest expense, there was an outstanding interest that was not accounted before, and we know that that is an expense that will reduce profits. It's just a matter of reducing your profits by the amount of interest outstanding. So that is interest expense. Then you have utility expense as well. Utility expense, the bill was understated, so you have to increase the expense, and when you increase the expense, profit will reduce. So utility expense, how much? Expense, that's 1.2. Then what else do we have? Utility expense, we have recorded that. Then the telephone expense is also on correction. We see that it's a debit. The telephone expense of 700. You also show that telephone expense, how much? That is 700,000. It's a debit in the profit and loss, so it will be a deduction when coming up with your corrected net profit. Then telephone, we have entered that. Purchases. The purchases, there was a purchase undercast. By increasing the purchases, this will increase the cost of goods sold, and then your profit will reduce. So purchases, that's that. Then what else do we have? There is a discount allowed. So we can show the discount allowed as well, because by crediting the discount allowed, it means that you reduced the discount allowed, which is an expense. You reduce the discount allowed, so profits were by wrongly crediting the discount allowed, it means that you are reducing on the expenses, and when you reduce on the expenses, your profits were understated, so you have to cancel that error that was made in the discount allowed by showing a deduction in the profits, by showing a deduction in the profits. Then what else do we have? We also have discount allowed. I've entered that. Then advertising expenses. Advertising expenses, the cost was under recorded, so we have to, when we increase the expense, then our profits will reduce. Advertising expenses. So that's how much. That's 1 point. That's 1.8. That's 1.8. That's 1 point. That's 1.8. Then depreciation expense. This is an expense that was omitted, so it will reduce our net profit on correction. Reduce our net profit. Depreciation is an expense, so it will reduce our profit. Depreciation expense, that is 2,625,000. So you add this in total. Add all this, and we come up with 24 millions. We come up with the 24,162,000. So this is what we have. We have the 5 to 70, we have the 1.2, we have the 700, the 11,160 is there, the 1,380, the 1.8, and then the 2,625. So what we have to do now is to get our corrected net profit figure. So you will have to get this plus, and then we minus these deductions, giving us how much? Giving us the net loss. By the way, we'll come up with the net loss. Come up with the net loss. Come up with a net loss of how much? Of 2 millions. 964,800. So that's what we come up with. That is what we come up with as our net loss. So on correction of the errors, our net profit recalculated becomes a loss. So corrected net loss for the period. So this is our loss. We come up with a loss in this case. It will be a loss, and this is what you carry to the statement of financial position. So that's our question. And look at this question. It's from CPA, December 2024, financial accounting. So there you have it. We have successfully navigated all the 9 errors for this Genuine Traders and Suppliers Limited. We have prepared our correcting journal entries. We have understood the suspense account, I believe, and we have arrived at a true net profit. I hope this step-by-step breakdown has made this topic much clearer for you. Remember, practice is key to mastering accounting. So you have to try working through similar problems on your own. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more accounting tutorials and tips. And as always, if you have any questions or topics you would like me to cover in the future videos, leave them in the comments below. Keep learning, keep growing, and I'll see you in the next lesson. Thank you for watching.